Welcome dear traders, it's me Ekaterina and you are watching a recap of the Asian session on January 5. Markets opened the year on a negative note but recovered slightly by the end of the first week. Major US stock indexes closed yesterday's session in a positive territory. The same is true about the European stock market. The risk sentiment is on early on Thursday as the Asian stock indexes are also gaining ground. Markets were trading mixed ahead of the Fed minutes release, which confirmed the hawkish stance of Fed Chair Jerome Powell and other officials. No participants anticipated that it would be appropriate to begin reducing the federal funds rate target in 2023, the minutes said. In the early days, this statement alone could dampen traders' optimism to zero. Yet we shall keep in mind that the meeting took place almost 3 weeks ago, so the new macroeconomic data coming from the United States may probably change the Fed's outlook. For example, the ISM manufacturing PMI showed that factory activity slowed down in December, while the inflationary pressures eased. New factory orders and production volumes contracted together with the exports and imports, and the US labor market is gradually cooling as well. This means that aggressive monetary policy pursued by the US regulator is bearing fruit. At the same time, it's still not clear whether the Federal Reserve will be able to curb inflation and avoid a recession at the same time. It seems that investors will consider this dilemma later, as contraction in the United States manufacturing activity will most likely slow the further tightening of the Fed's policy. The low volatility index of 2022 confirms that the stock market is gradually turning bullish. Earlier on Thursday, the so-called fear index has gone even lower. In the volatility index drops to 20% or below, and this means that a proper uptrend is developing. Increasing risk appetite and demand for stocks pull funds out of safe haven assets. While US government bonds are holding strong at the previous levels, the US dollar is losing ground on Thursday. Even a hawkish Fed minutes failed to stop the greenback from a fall. In the Asian session, the US dollar index is fluctuating in the narrow range of 103.90 and 104.30, which is near the closing level of 104.25 seen yesterday. In the near term, the upcoming non-farm payrolls report will be the main driver for the market. Until then, the US dollar will most likely stay in the negative zone. In the early trade on Thursday, the US dollar was trading near the level of 104.30 against the basket of 6 major currencies. The yen may also have a challenging day today. If the non-farm payrolls data turns out to be strong, this will allow the Fed to continue its aggressive monetary policy. At the same time, predicted inflation growth in Japan will dash hopes for a change in the ultra-loose policy of the central bank. In fact, additional policy easing by the Bank of Japan may fuel already high inflation. If so, the US dollar will again advance against the Japanese yen. This week, the yen has been resisting the pressure from a stronger greenback, as we can see on today's chart. The pair looks very volatile and has already reached the level of 132.40 yen per dollar. Early in the morning, the Japanese currency was moving upwards and even tested the key support level of 132, but later the US dollar bulls stepped in and pushed the pair to the price range of 131.70 and 132.60. After rapid surge to the monthly highs on Wednesday, the Australian dollar began to decline on Thursday. So, the breakout of the key level of 0.6880 will go down in history. Today, the Aussie was mainly trading in the red between 0.6802 and 0.6847. In the Asian session, the US dollar has pushed its Australian rival to the level of 0.6007. The US dollar looks especially strong amid a more dovish stance of the Reserve Bank of Australia, even though the regulator lifted the rate over 8 times last year by a total of 300 basis points. Given the high inflation rate in the country, the Australian Central Bank may continue to raise rates. The next meeting of the regulator will take place on February 4, and the Aussie is already looking for support from a more aggressive auctions by the Reserve Bank of Australia. However, all attempts to recover have failed so far, when China lifted restrictions on coal imports from Australia and the Aussie gained some solid support. But this optimism was later offset by new COVID restrictions in China and a slowdown in its economy. The market is likely to stay volatile throughout Thursday and Friday until the release of the US labor market statistics. Still, you may find attractive trading opportunities even in such a choppy market. Get the most up-to-date information from InstaForex TV and trade with a profit. Join our next video review in a few hours, and see you soon.